Good morning. Today is November 27th, 2024, and tomorrow's Thanksgiving. Boy, how time flies. November 2024, and I decided to go ahead and do a show today real quick. And let's see, moments away from PCE inflation data. Oh boy, I could do a whole show about inflation, but I talk about that pretty frequently. And to sum everything up, when it comes to inflation, the damage has already been done. No matter what the rate of inflation is going forward, and hopefully it's low, the damage has already been done because even if the Fed were able to achieve their 2% inflation target, everything's still going to be way more expensive than it was just a few short years ago. And so that's how it works, right? Inflation's cumulative. And so, yeah, it's already a disaster. And short of some sort of a recession, the prices of everything is going to stay really high. And so now we just have to deal with it. And of course, it's a disaster for a lot of people because, I mean, stuff is just crazy expensive. I think I did a show a couple weeks ago, and I think that I actually showed a little image where the price of all kinds of stuff is up way more than the CPI. And so that's how it's been. I have a weekly chart of the S&P up, by the way. I thought what I would do today is do a quick show and look through a bunch of weekly charts because, for one thing, Friday is one of those abbreviated days, and I don't think anybody's going to be trading. So, the day after Thanksgiving, typically there's just a little bit of month-end positioning, I suppose, but I don't expect anything dramatic. So, I thought basically at the end of November. And of course, you guys know that we're in a seasonally seasonally speaking, period of time here. So look at this chart. This is it's pretty incredible. Back over here we were talking about cup and handle type thing, and it's practically textbook. I mean, this sort of cup, and then here's your handle, and I don't have any trend lines drawn on this particular chart. You can see over here I've got about 5 or 6 different versions of the S&P up with different marks on them, that type of thing. But um, so inflation came in as expected. That's another thing too, is those of us that have been around the block a few times know that they've changed the way inflation is calculated so many times that it doesn't really, the rate of inflation, CPI, does not even reflect reality. So that's a whole nother conversation. But funny thing, I was thinking about that recently because I got a note from the electric company that they want to raise our rates. Well, they're going to raise our rates, but I think they have to get approval or something. But anyways, 10.6% starting in 2025. So the electric company's raising rates 10.6% starting next month, and all these little things add up. And so inflation has been an epic disaster since, well, over the, since COVID, basically, since COVID was over. But anyhow, I wanted to look at a bunch of charts on the weekly time frame. I'm not even sure it's worth bothering zooming into the daily, just because I want to make this kind of a quick show. Got lots of stuff to do. I have to actually go to the store today, which should be interesting, the day before Thanksgiving. But fortunately, it's nice and warm here. We've got some pretty good weather, and then we're going to get cold next week. So here's the S&P. Real quick, let me zoom out here. The problem that I see right now in the markets is is that everything just about is overvalued. The market in aggregate is overvalued. And while there are still, companies that are doing well and this and that, everything's so weird, and so you look at the charts and you can't argue with the momentum, right? We've learned that over the years, and those of us that basically go by technical analysis and look at the charts purely objectively, you never want to argue with the trend and the momentum. And I mean, here we are, we're at all-time highs, right? And so we've had a little, keep in mind, this is the weekly charts we're going to look at. So I'm just going to stick to the weeklies here because they provide a big overall picture, and the end of the month's always a good time to look at the big overall picture. So, here's COVID. It always makes sense to go back and look at the COVID sell-off, and then here's where the Fed created trillions of dollars out of thin air to bail out the economy. This is, 2022 was a pretty rough year, right? After that, I sort of expect the same thing to happen at some point here, right? The trend is your friend until it bends or something. There's some saying out there, but anyway, this particular trend that we're on right here is pretty amazing. It's reminiscent of lots of other, big, long trends that persisted with a few dips along the way, but eventually, so there's no telling how much higher it goes, right? It could keep going for a period of time, but at some point it's going to crack and there's going to be an actual correction, not just a dip, but an actual correction, and or, worse yet, something like this. And so the problem is right now that everything seems overvalued when you look at just about any metric. Everything is at some of the highest valuations in history. And I have that little chart of the Buffett indicator, and the smart money is taking profits, obviously. And then of course I'm not going to even go into the fact that we got all these animal spirits and all this crypto and Bitcoin and all this stuff, and I mean that's just they've turned the markets into sort of a gambling arena, if you ask me. And quite frankly, it's I've seen it before. I was doing this during the .com. That's when I kind of got started, was back in the late 90s, and so I've been through quite a few. Um, I'm hesitant to use the word bubble, but quite frankly, this is a bubble type environment. And I'll tell you something funny. I have CNBC on in the office with the sound muted, but I'm seeing stuff that's reminiscent of the .com bubble. I see companies, like, crappy penny stocks advertising their ticker symbols on CNBC. I'm seeing Motley Fool commercials and that type of thing, and that's just reminiscent of the days back in the late 90s. And so, back in the late 90s, tech stocks were insanely crazy because of the internet was brand new. And so now it's there's always a bubble somewhere. And right now the bubble seems to be in AI, generally, AI. But quite frankly, AI is pretty amazing. It's extremely amazing. And is it going to change the world? Yes, definitely. It's already changing the world. So for the good, I don't know. It depends on what you're talking about, but it's going to take a ton of jobs. I can tell you that right now. Anyway, the market is still kind of top heavy too. I think I saw somewhere that basically, a significant portion of the S&P and especially the Nasdaq 100 here is basically almost, 7 or 10 stocks, right? So I forget what the exact number is. I should have saved it, but that stuff's all fluid, and it's been like that for a long time, right? You remember the FANG stocks? Well, the FANG stocks kind of morphed into, a few came and went. They morphed into the Magnificent Seven or whatever, but basically, the S&P 500, the top 10 stocks is basically, a significant portion of that. And so people still look for, I mean, there's lots of little companies and little stocks and that go on these tears, right? But these bubbles form, stocks go parabolic, and then they crash. Individual stocks, I should say. But anyway, there's a lot of animal spirits out there right now, and it's going to be interesting to see what happens because, when the new administration takes over in January, there's going to be a lot of shakeups, so to speak. And, I've avoided discussing politics on this show, basically the whole election cycle, because I despise politics in general. But there's going to be a lot of changes coming down the pike, and that's going to be interesting. I read an article on Zero Hedge the other day that basically said that they're going to pull the plug on the power, not the powers that be, but there's that they're going to wait till Trump's in office, and then they're going to tank the economy and the markets and all that and blame it on him. That's what the gist of the article, and that kind of makes sense in a way, right? And so, and quite frankly, that crossed my mind at some point. So it's going to be that's something to think about, right? So look at the Nasdaq 100. I mean, just absolutely incredible. We've got the same kind of persistent uptrend going as we had back here. Just for the fun of it, I said I wasn't going to do this, but just for the fun of it, I wanted to switch to a monthly chart just because I wanted to, these long-term perspectives. So look at this. Wow, that's pretty amazing right there. This is a monthly chart, and yeah, this sell down that and well, hang on. Yeah, this is crazy because I mean, if you go back to like 2008, it's not even a blip on the chart, right? But I guess I could switch to these are obviously not log charts, but let me go back to the weekly chart here. I just wanted to see what that looked like. Anyway, here we are. We've got a really nice persistent uptrend, and quite frankly, on this weekly chart, this is a 200 and a 50, which I use on the daily chart. But quite frankly, as I look around charts, they're relatively relevant on weekly charts too. So there you go. As long as the weekly chart is over this 50 period, 50-week moving average, things look pretty good, right? You can see back here in 2022 when we had that super nasty sell-off, that first thing to happen was the price tested the 50-week and then started bouncing around and broke below it, and that's all she wrote. So real quick, we'll go back, we'll look at SPY here. Same sort of thing, right? Look at that 50-week. And of course, the moving averages are moving averages. In my old age here, I've become more cognizant of levels, actual horizontal levels on the chart. I pay more attention to than trend lines and moving averages, but it's interesting to note that basically the 50-week moving average gives you a lot of decent information. So pull back to the 50-week moving average. That's when you want to, I mean, that'll happen before any bear market. So put it that way, right? Unless the price gets so extended from the 50-week that, a pullback to the 50-week is a bear market. So look at the Russell 2000. This is, for all the years that I've been doing this, if you go back, 5, 10 years or whatever, we used to really pay close attention to the Russell 2000 because I've always felt that it was more representative of just your average stock and the overall market and what it felt like to be, a stock trader, swing trader, investor type thing that was, jumping around, buying different names, buying and selling stocks. I always thought that the Russell 2000 was the most representative of the actual market as opposed to, like I mentioned before, real concentrated top-heavy indexes like the S&P and the NASDAQ, because this is 2,000 smaller stocks. So anyway, here we go. As you can see here, the Russell 2000's had a pretty rough way to go, and I mean, you got to go back several years, and it's finally, it's finally formed that big giant cup. We don't have a handle yet. It's going to be interesting to see what happens. Oh, plus this time of year, I was talking about seasonals. Typically, November and December are the strongest period of time in the market for the small cap stocks too. So we could get a little extra juice in this, but I'd kind of this would be more constructive if, well, there's several things that could make it more constructive. It would be more constructive if the small cap stocks were, growing their profits like gangbusters and fundamentally sound, but I think a large majority of them lose money. But anyway, looking at this from a technical perspective, this is a pretty constructive chart. That doesn't mean that there's not a sort of a big double top form. And keep in mind, nothing happens quick on the weekly chart, right? So weeks and weeks and weeks can go by, and then it will reveal itself. I see a cup, and of course it's broken out here, but it seems a little bit more likely that rather than just take off and blow up to the upside, it seems more likely that we'll see some sort of a handle form, over here, maybe into the new year. It just depends. So there's a lot that can go wrong. One of the things I wanted to look at real quick was I wanted to bounce through some of these sectors, like some of the spider sectors, just for the fun of it. Look at the financials here. This has kind of been a little bit under the radar. And the funny thing is, I've never been a huge fan of financials. Just never have, because typically the financials, move like they just move really slow, and they're boring. And the stocks in the financial sector, I mean, some of them, this chart looks extremely impressive until you look at the scale of it, right? And I suppose super conservative, large amounts of money, that type of thing. That's basically, these are very low historic volatility HV stocks, typically in the financial sector. So the thing of it is that, if you bought a stock at the beginning of the year and it went from 42 to 51, that's a good investment. It's a decent trade or whatever. But compared to like big movers and different things, the financials have always been kind of boring. But look at this. So it's been just a little over a year, basically right about a year, right? Draw a trend line across that. And so right about a year ago, the financials just really started to take off to the upside. And I believe that was in anticipation of rate cuts. So anyway, I believe that was in anticipation of the rate cuts. And we all know that the market started rallying about 2 years prior, ahead of the actual rate cuts because of that whole pivot thing. And so that was kind of crazy. So anyways, kind of boring. XLF. Let's look at the industrials here. Industrials. This is actually a beautiful chart because you can notice that there's like sort of this whole flat top, right? And keep in mind that this flat top breakout that occurred here, right, was basically, look at the scale down here. This is several years. 1, 2, basically 3 years went by. And what's interesting to me is this little sort of breakout here. A year ago, this past summer, there was this little breakout, and then the pullback, right? And it pulled right back to this support level there. And then once it broke out again, it was just off to the races. So industrials, and of course, a lot of these sectors have a similar sort of chart. Consumer discretionary, big giant cup just recently broke out to new highs, which is kind of interesting too. So yeah, some of these charts look a lot different than the actual index charts. That's why I thought it'd be kind of interesting to dig into the sectors. So look at this. I mean, just a few weeks back, it was sort of coiling up, and whenever you see a bunch of like sort of narrow range bars that are coiling underneath the high, there's a good chance that, especially in a decent market environment like this, there's a good chance that actually make a move like that. Speaking of which, let me it was Apple. Wanted to mention that about Apple while I'm thinking about it, so I don't forget. Look at that. Boy, I'll tell you, I mean, this, like I said, this is a weekly chart. Nothing happens fast on a weekly chart, but I'll tell you, Apple has been coiling up since, if you ignore this sort of weird, that had to have been like the earnings or whatever. That was like, a shakeout, knockout. That was a shakeout, knockout. It took out all the stops below 200, right to this prior support level. And basically, it's an outlier. It's just a really weird sort of outlier. But you see these type of things, right? Anyway, so if you totally ignored that 1 week there, you can see that it broke out and has been since July has been consolidating right around this 225 level, and boy, it sure looks like it. I mean, obviously, 3 or 4 weeks from now, it could come back in and consolidate more, but it sure looks like it wants to break out to the upside here. Really, Apple looks pretty amazing. I mean, I wanted to look at Microsoft. Apple looks like a good trade setup. So does Microsoft. Microsoft has been, we've looked at this. I got a chart with a bunch of trend lines drawn on the daily, that type of thing. But as you recall, a few weeks ago, we were kind of looking at Microsoft. It looked pretty good, but the earnings came in and kind of held off like the breakout to the upside. I mean, it's been sort of looking like it wants to break out to the upside, but at this point, I mean, this is just a beautiful sideways sort of consolidation. And so, it's entirely possible that you see another little sort of knockout dip or whatever, but it kind of looks like it wants to break out, to be honest with you. It really looks like, and I should basically, let's see, what do I got here? Yeah, just for the fun of it, here's what you want to look for. You want to look for a breakout. I like charts that are getting this tight. Notice that I got the wicks here. I got the wicks on these candles. Put it at the top of them. So. And then, theoretically, like these lows right here. Let me close this. Yeah, you don't need me to tell you that well, let me just put that there. So theoretically, these charts just drive me crazy. Let me draw it here. Here we go. All right, so here's my takeaway trade idea of the week. Is Apple and Microsoft might wait for Microsoft to break above this on the weekly time frame, and then stop would go here. Now it's entirely possible it chops around and breaks out of here and then chops back down and all that, but what you want to catch is the idea is that sometimes they consolidate and then they make a big move really quick, right? And you've seen that over here. It just like back over here, it was stair stepping up. And so, the longer and the bigger the more time that passes and the tighter the consolidation, chances are that when it breaks out, in one direction or the other, chances are that you get a run, an actual run in that direction, and that's what we want to see. And so it doesn't always happen. Sometimes you get a breakout and it doesn't just run up, to new highs. Obviously there's a level of resistance right here. But it's kind of what am I trying to say? Whoops. I did not mean to do that, but let me go ahead and just save it anyways. It's so annoying. See, and as soon as I make one little tweak to the chart to make it a little bit better, then I got to save it again. Oh, my point is that it's like a law of physics, right? In order to get back to to all-time highs, to get to these highs and break through them, the price of Microsoft absolutely, positively must pass through this line on the way to, this line, right? And so nobody can argue with that. When in all the years that, oh jeez, in all the years that, I've been a fan of technical analysis and drawing stuff on the charts and all that stuff. Let me just get rid of that. So annoying. Anybody that would say, well, you can't just draw lines on that. And that's kind of, technical analysis is part art and part science, obviously. But I always fell back on the argument that in order for this price to get back to here, in order for it to get here, it has to pass through this line on the way. And so that's like an absolute, it's kind of like it's a mathematical, physical fact. And so how do we take advantage of that? Well, we wait for it to, instead of buying it right now, we wait for it to start breaking above this line, and that gives us a much higher probability chance that it's going to get up to here, rather than just saying, oh, it looks good here, because 2 weeks from now it could just break down. So you just never know what's going to happen. And the other thing is that sometimes they'll break out of a pattern and then not really do anything, and then you think, oh well that was, that didn't work out. But here's the other fact is that some of the breakouts in different patterns, some of them work, and then some of them don't. But this is a really good sort of example right here, this little consolidation here. So you could have sort of said the same thing. It's been trading sideways, coiling up, and we're going to wait to see if it breaks out and then jump on. And so if you did, you actually got a really nice run over several weeks. And so when it does break out of here, when and if it does break out of this, that's how you can potentially catch one of those big runs back up to the high, and then beyond. And look at this MACD too. That's the other thing that in my opinion looks so good about Microsoft. I mean, this thing's been coiling up for a long time, and that weekly MACD just looks ready. It just looks all set up. So we'll have to see, and we'll obviously revisit this real quick. Let me go back to Apple. I guess I'm not going to make it through all the sectors and all the different stocks, but that's fine. I really wanted to, yeah, Apple's a little bit different story here. Look at the MACD right here. And this, keep in mind, we're on weekly charts. Look at the MACD here right before this last big sort of run up started. So, and back here too. And so, one of my favorite indicators, to be honest with you, and I'll give you a little tip that I've picked up along the way, is that these MACD crosses, especially if you're looking for longs, if you're looking to get long a stock, you want to see them occur below the zero line, right? Like for instance, back over here, right? You got some MACD crosses that happened above the zero line, and yeah, it's a lagging indicator, and it's basically just following the price. And you get some decent, upward price movement, but they're not as powerful, I don't think, as, and there's one that's like kind of, that one was like a false, a false signal. That's why you can't just pick any one particular indicator and swear by it. They're all just sort of guides, right? It's kind of like the weather. You kind of, the weatherman gets it wrong a lot of times, but he's got kind of an idea what might happen. But anyway, so there's a lot of other considerations when I talk about everything's just basically probabilities, right? So you got a MACD cross below the zero line way back here, a year ago July, and you got a bit of a run up, but it stalled out at the prior highs, and so that one didn't really work. And then this one did work, right? The very next one, same sort of thing, and it just blew through the highs. And so, this particular one, notice that it occurred basically above the zero line, and look what happened. It ran into the prior high and then came back in. And notice on both of those examples that the low was slightly lower than the prior low. And that's, it happens a lot to knock out what they call the weak hands, right? So weak hands got knocked out there because they had their stop right under that low. And then the weak hands got knocked out here because they had their stop under that low. But then, the ones after that, so there was one fake out here. And so this one worked, this one definitely worked. And, whether this means anything here, I don't know. It's a little bit different because this is actually more of a breakout. So this MACD on the weekly chart isn't really any big deal. So unlike Microsoft, which we just looked at, which is sort of a big deal. It is not below the zero line, but it's close enough. Now look back over here, right? You had a couple of sort of false type moves, but not really. I mean, this particular one essentially nailed the entire low, right? If I put my crosshairs on it. That MACD cross right there, nailed the low, and then the stock basically doubled from there. So keep that in mind. And of course, it pulled back, which was kind of interesting. Like the MACD kind of pulled back right down here, and that was this little pullback. But anyway, long story short, even this one worked, and this one was above the zero line. This was kind of on a breakout, and so that one worked pretty well. Anyway, that's to me, I used to have charts that had the MACD, the stochastics, the RSI, all that stuff. But I like the MACD and the MACD histogram, and it looks pretty darn good here on Microsoft. Do I want to look at any other stocks real quick? I know I kind of got off topic. Yeah, I suppose we should look at NVIDIA here, right? Yeah, NVIDIA is looking a little bit rough. It's looking a little bit rough. Now, you say that. You had a 2-week sell-off here and then back to new highs. And so this is... You can't argue with their numbers unless there's, I've seen lots of people like sort of pick apart NVIDIA, and there's talk about whether it's, how legitimate their numbers are, and the concentration in their biggest customers and their accounts receivable and all that. But just from a technical perspective, it looks like it wants to come in more. Like you never want to jump in after like a spike high. So I'm sure there's lots of dip buyers on the way down. Real quick, I like to keep these at 30 minutes. I want to look at MicroStrategy, right? Because as you know, this is a pretty controversial stock here too. And this weekly chart is just nuts. I mean, the daily chart's even crazier, but that spike up last week, right? That spike up, and then, I mean, I'm not going to do it in my head, but the percentage difference between last week's high and this week's low is just insane. And so, yeah, this is, and quite frankly, I mean, this looked a lot different a couple of days ago too, right? I looked at this when it was down at 350 and I was like, whoa, 550 to 350 and it reminds me of, you guys obviously remember this. This is a very well talked about stock. And keep in mind, this thing split 10 for 1, right? So this was a $250 stock that went to 1200 and then back to 250. And so, this is basically for people that are new. I know a lot of us old guys and stuff been around the block, and like I talked about before, we've been through the dot-com bubble, and we've seen everything in the world, and we've seen what happens when stocks go parabolic. And we've read about the tulip bulb mania and the South Sea bubble and all that stuff. And so, that's how parabolic moves end up looking like this, right? But anyway, this is a fun chart to look at, and and the other thing about this is, the fact that this is one of Nvidia's biggest customers, as you guys know. But I digress. I was on a roll thinking about something, and I kind of got sidetracked. But some of these charts, I mean, they're fun to look at. Let's look at AMD, because that's kind of been one that there's AMD is kind of in like a big gigantic, I guess you could characterize this. I mean, we're looking at several years here. You could characterize this as like a big sort of cup and handle. And I mean, here was like the inner cup and the perfect handle in that big move. And so now you got kind of like a giant cup. And honestly, every time I look at this chart, it's so tempting to want to draw trend lines basically across this. And so, is there more downside? Yeah, there's potentially a ton, quite a bit more downside. But this is worth looking at because it's approaching like an extremely significant level of support here. And it's got the, A, B, C, correction thing or waves going on. But anyway, this is going to be an interesting one to watch just to see if it can work its way back up to the top of this channel here. Right? So let me close that. Let me move this over. So anyway, I think you kind of get the idea of, quite frankly, in the future, I should start. There we go. So there's there's a little no man's land there. But the important thing here is that it's really close to support. And so, this is a weekly chart. So, over the last couple of weeks high, potentially take a shot at it. Ideally, you would see a bunch of more consolidation. It's not real likely that you'll see weeks and weeks and weeks of consolidation and a breakout here. But that's obviously when I do see that, when I can draw a downward sloping trend line and have like a really good sort of resistance level that the price can break through, and the breakthrough occurs like breaking both levels at the same time, that's a powerful signal. Obviously, that's not going to likely to happen in this case, but we'll keep an eye on this. So, yeah, I went a little over my time, but I get carried away looking at charts and drawing stuff on the charts. So I'm going to wrap it up here. Hey, have a great Thanksgiving, everyone. I will see you back here, same time, same place next week.